Hello traders, it's Thomas here from Vagafx. I know it's been a while since I released my last video. I know quite a few of you have been asking questions about where I've been, and the truth is we've just been making and recording content for the course that's going to be coming up over the next 2 months. So that's where I've been. So I haven't been as active on YouTube, but I did want to give you a video today on how to analyze multiple time frames just using one time frame. And you'll see why this is so important within my own trading strategy in later on in the video, just because it is going to massively help you with your psychology. I've found over the years that by using multiple time frames, you're actually going to get what I call trader's paralysis, where you're actually going to confuse yourself just because your mind's going to be thinking about so many things. It's going to not go very well for you there. Obviously, using fractals can be really useful, but I do always think if you have got too much going on with your chart, it is going to confuse you, make you hesitate taking trades, and also stop you from getting into high quality setups. So this is going to be really helpful for my own strategy, but also if you are trading an SMC style method of trading, it's going to help you massively as well. So let's get straight into the video, guys. I hope you guys enjoy. So guys, we're going to start just drawing a diagram on the chart, which is going to identify three main types of structure. You're going to have major structure, which will be the major highs and lows on the time frame that we are analyzing. You're going to have minor structure, which will simply be major structure but on a sub time frame, but we can actually see this on the chart. And then you will also have swing structure, which will be major highs and lows but on a higher time frame, but we can actually identify these on the same time frame that we're analyzing, meaning that we don't actually have to be looking at these different time frames all the time. So we're going to start off by just drawing some lines on the chart. So in this, we've got a nice uptrend. We've got some substructure printed there, and we get to the top. Now, obviously, we know this is an uptrend because we've got positive breaks in structural bullish breaks to the upside. I'm just going to annotate this now for you guys. We've got some major highs by here, and then we've got major lows. Obviously, a major low is only created once a break of structure is made. Until that happens, this is minor structure. Once you get that break, that is still minor structure. Once you get the break, then it becomes major. So this is all major at the moment. Now, these small peaks in between the major high and major low, we still will utilize these in our strategy, but they won't be as effective just because they are substructure and it takes less imbalance to break through the liquidity that's created above minor structures. So when a minor structure does get swept, it can obviously give us some reasonable thought that the trend is going to continue, but it's not going to be as plausible as if a major high is broken there. So just make that smaller just so you can see, and that would be a major low. And then once we get to the top, guys, what happens is once a trend obviously comes to an end and an imbalance decreases in the market, so you find that more sellers start coming in, or the banks have found a reasonable spot that's so discounted that they're going to reverse price, you'll find that all trends come to an end and will start trending to the downside. So this would be the break. I'm just going to change these lines, guys, just to make it more clear because I use that template for liquidity. We've got a long break of structure, a short break of structure. This, as it's going to be the extremity, this is going to be the last supply zone before the break of structure to the downside, and that is not, it is a major high on this time frame, but if you actually go on to a higher time frame, as this is going to be the start of the trend, this is actually simply going to be a major high on a higher time frame. So we're going to call this a swing high. And what you'll find, guys, is although price is going to come back up and retest supply zones on the way down, you'll actually find that all imbalance will get mitigated. We'll just leave imbalance here. You'll actually find that even though prices started trending downwards, on a higher time frame, this is just substructure. This is the major high. So at some point, we can reasonably assume that price is actually going to come back up, breaking out through this, but continuing downwards. Because on a higher time frame, this is a major high, and this will be the major low. These, although being major lows on this time frame, would just be substructure on the hourly chart, for example, or the 15-minute chart. So by utilizing these extreme zones, in my community, we call them extreme OBs or XOBs for short. It's not something I've come up with. It is something that I've personally noticed on the chart, and I haven't seen many SMC traders trading them, but I have seen a few that are trading these extreme supply zones without really realizing why they're so important. And they are the only sort of zone that we actually trade in my community there, if you have been following my trades. We can also deduce where these extreme highs, swing highs and swing lows come from is by looking at the volume on the chart. So if you actually apply a volume indicator by here, although volume is simulated on TradingView, so we can't actually see the real-time volume data that banks, on the actual intrabank market that banks use, but on the simulated volume, you'll actually find that the volume will actually be very high at these extreme points, which will give you even more confirmation to get into the trade. You'll also have pockets of liquidity. So by here, you'll actually find that there's liquidity built up. That'll be used to sweep price up back into these regions where orders are left unfulfilled by banks. So the reason why this is working, guys, is basically only the banks, which take up about 99% of the volume in the Forex market, only they have the money, the power, the influence, the amount of orders which can cause an imbalance in price. So they're the only ones that can break trends and start new ones. So they would have caused an imbalance here with a massive orders. They want as much orders as they can fulfilled. So they create levels of manipulation to create liquidity, to push price up, to fulfill the rest of their orders. They want as many orders as possible fulfilled, guys. So that's what these schematics look like. Obviously, you can look at the Wyckoff methodology, which will go a lot more in depth, and it is a bit more complex than this. This is just a simplified method of looking at it, and you'll find that if you actually apply this, you'll actually be able to apply this way of trading to price action much better than you could with any accumulation or distribution schematic put out by Wyckoff. I do recommend reading Wyckoff. It is great for changing your perception of the market. You'll actually start seeing it from an SMC point of view straight away. You'll know that everything revolves around liquidity, and liquidity is just the banks trying to get as much orders as they can fulfilled at a price before pushing it into a new level. So what we're going to do now, guys, after looking at this diagram, just one more thing there. So this would now be a swing low, just because you've got a break of structure to the downside followed by a break of structure to the upside. But what you'll find is extreme order blocks. Like I said, these have high volume. If this has low volume, you'll actually find that it'll sweep. So you can actually differentiate between extreme order blocks to basically safely assume if price is going to reject from those areas or not. So now we've looked at these different types of market structure, guys. I am now going to show you some application to actual proper price action, just so you can see this working out. And this may blow your minds a bit. It did at first when I started looking at it, just because of how simple it is, how good it's going to be for your psychology. Like I said, you're not looking at all these different time frames, and you'll see how profitable it is, just because you are always getting in areas where there is going to be a large amount of volume from banks, which cause the initial imbalance. And as we know, guys, on the Euro USD, which is the only pair I trade, is so efficient in coming back to mitigate levels of unfulfilled orders. So we're going to start our chart from the 11th of April. So this was only about 10 days ago, guys, but I've found some really good price action to demonstrate this process. So if we come onto the chart right here, we can see that you've got this positive order flow. So price is breaking structure to the upside. So we know that price is on a uptrend, a positive order flow. And we're going to wait for price to come down. Now, price has broken down here. Sorry, you can hear my dog in the background. Let me close my door. So we've got this break of structure to the downside. So we know price has reversed. This has left an extreme order block to the upside. We can see this because you've got imbalance coming down. We're going to put our order block by here, and price is going to continue going downwards. Now you can see you've actually got this break of structure to the upside. We're also going to class this as a break on a higher time frame, although not as high as the 1 hour, but you will find on a on maybe the 15-minute chart that this will provide more volume than just a standard order block like this. So we're still going to mark it out, guys. You'll actually see how often price comes back into these zones. Obviously, that is a break of structure, so we're not going to even look at that. We're going to continue going downwards. I'm not going to draw any orders there, guys, because you'll just see the zones rejecting. And tell you what, I'll just might be wise just for me to speed time up. You can see all this liquidity building up here. And just there, guys, I know I didn't highlight this, but you've got a break of structure. So you've got this negative order flow. You've got a break to the upside, and you see that price actually comes down into this extreme region. That's when it reverses. So that's one way. If we could back up now to here, you can see that price has come back into this and heavily rejected. It's taken out all this liquidity that's been built up. So like I said, this is just manipulation from banks, creating liquidity to move price up into areas where their unfulfilled orders are. So if you're like me, we want to get in where the banks are placing their orders, because that is going to give us the highest likelihood of profits, just because we are getting in to the most probable points in the market, which are where the banks are placing their orders. All this price action, guys, maybe not so much on different markets like crypto, but this is all getting made. All this price action is stemming from decisions made by banks. We are literally just looking at a crystal, well, it's not even a crystal ball, because you're going to find price actions a lot unclear, but we are analyzing each candlestick, trying to deduce information from banks. That's basically what we're doing, guys. You could even draw your liquidity lines here, and that's going to give you a lovely profit. And I will keep this extreme order block here, because like I said, it's still an extreme supply zone. And on a higher time frame, I'll just actually move up a chart now. Go to the 15-minute chart. We'll go to the hourly. You'll actually find that this is literally just an order block already refined. So obviously I imagine a lot of the viewers watching this video will be applying fractal methods to a chart, going from the hourly or the 4 hourly down to the 15-minute or 5-minute chart. Whereas me, I've already got a refined order block already, and on a larger time frame, it is just already refined. It saves me even having to go onto those higher time frames. This is why I believe your psychology is so benefiting to be trading like this. You're not wasting time analyzing different charts. You're not looking at higher time frame order flow, because you're just going to maintain the same bias, which is going to stop you from finding setups that go the opposite direction. So you're going to miss out on trades. This way of trading is so simplistic, so mechanical, that you're just going to be making robotic decisions without emotion. There's a reason why the forex trading market is so heavily bombarded with algo bots and robotic traders these days. It's because they do work, guys. Even the banks are using them, and it's because they can trade without emotions. They're not making those decisions that stem from bad psychology. But if we go on to the 5-minute chart, I've already got that drawn. It's already refined down from me even looking at the without me even looking at the higher time frame. And if we just unrewind price and come back to it, you can see that price has actually come back into that region. And obviously, this can take days or weeks even. Like I said, that was about 10 days ago, guys, but it does still happen. That order block is just as valid now as it was back then when it was first created. Obviously, the more historic an order block is, you'll find that banks can remove their orders. But I mean, just looking at the chart now, guys, you can see another one that's happened by there. That is just a swing high on this time frame. On a higher time frame, it's just a major high. And you're saving yourself having to move down these time frames, because you can do it all on one. And you can, after doing this for a while, guys, you will just be able to do this with your eyes closed, obviously metaphorically, not literally. But yeah, just a really quick video, guys, on part of my trading method. It is something that I've actually been going over heavily with my community, and I have started up one-to-ones recently where we are going through lots of different examples of this, and I'm training people up to basically take trades the exact same way that I do. The course is on its way, guys. I know people do keep asking questions. That will still be a few months off, to be honest with you, but me and Kelton are working heavily towards it. Until then, I do advise just coming into my Discord community. It's free of charge. You'll see my analysis most days and the zones that I'm trading from. There's already traders that have started becoming profitable just from looking at the zones I'm entered, and it's helping them in identifying zones themselves. You can find a link to that in my description, and you can also find me on Instagram, where I put out educational content on there. And I will start looking to pump more videos out over the coming weeks there, guys. I do apologize. There's been a bit of a drought there in terms of YouTube content. I will catch you guys all in the next video. I hope you have a lovely trading week. Peace out.